Hello everyone. Today I'll be going over my planned trades going forward for next week. Quick overview of my account. On January 1st I was at $4,700 and today I'm at $110,600. Total gain year to date of 273%. My main holding is Tesla stock and is at $407 a share. Due to my margin balance being rather high, I don't plan on purchasing any additional stock at this time. The only stock that I may increase my position on is the Ford, and I will increase my position if it goes above $7 a share. And then I'll turn around and write sell puts on those options. So with these holdings, I will write call options on all of the stocks that I have currently in my portfolio. So the first one being CCJ. For next week, since the premiums are low, I'm going to set a limit price at 4 cents or $4 per contract. And if it doesn't sell, then I will move it out to the next week and wait for that price of the stock to increase in value. And then write a call option at 11 strike. Moving on to Ford, that's really nice because it's very close to being into the money. So it's right around the 650 mark, so I'll get my highest premium there. And so my planned trade is to trade all of the stock that I'm selling short, 1,200 shares or 12 contracts, at $650 strike price. And that would give me $14 per contract or $168 for the week for that position. And then lastly is the Tesla. So how I came up with the price options for the Tesla was based on the historical data. So I reviewed over the historical data for the last year and a half, and I found 6 instances where the Tesla stock went over 20% in 1 week. And there was one singular occurrence where it went over 30% in 1 week, 31.57. And there is a flaw with the model in the sense that options can still be exercised up to 1.5 hours after the market close. And the historical data does not show these after-hour market price swings, but they can be substantial if there's a major announcement that occurs right after market close. So that is one of the main flaws that I see with this particular model using historical data. And there can always be a new high as well. That would put the maximum based on historical data right around $535. There's no contract for that, so that would put it between the 520 and the 540 call. And so the majority of my call options that I'd set up or will set up for next week will be centered around that. So I'll put a 520, 540, and 600. Additionally, I did purchase quite a bit of shares last week, so I will set a lower call option at 500, which would put it at roughly 22.7%. And there was only 6 occurrences in the last year and a half where that did occur, putting a roughly about 8.7% chance. As far as news goes, next week, the only thing that Tesla has planned to release will be the production numbers, and that should occur on 10/2 or on the Friday. And they don't further subdivide those production numbers. They group them as Model X/Model S, and then they group the Model 3 and the Y together as well. And they don't say what region that came from, China or the US. Do a quick look on the probability of occurrence based on the volatility of the stock. So when we review over CCJ, that's at 57.06%. And the probability that option that I write on Monday will be 7.82% chance that it will actually reach or exceed $11 a share. And we can see that here on the ranges that I have set up. And also based on this volatility model, there's a chance or roughly a 50% chance that it'll drop below 10. Realistically, I don't think that would occur because the uranium price is still quite high. But these models are just a guidance. And these models are strictly based on the volatility of the stock and the current price that the stock is at. So moving on to the Ford, based on the volatility, what's the probability that it's going to be at 650 or below? Roughly a 49.74% chance. What's the chance that it would actually go above 7, where I would purchase additional shares going short? I'm putting that at roughly 15.4%. Okay, and then moving on to the probability analysis for Tesla. So for the Tesla stock, I put the ranges in based on what my planned options are. So for 500, there is a 1.5759% chance that it will be in the money. And then the next option, 520, 0.71% chance, 540, 0.44% chance, and lastly, above 600 or above is a 0.02% chance of occurring. So highly unlikely. So that would give me a total amount from the options that I plan to write going forward for next week of 422. So quite a bit lower than the premiums that I collected last week. But with battery day occurring, there was very high expectations on the Tesla side. The volatility was almost twice as much as what it is now. It was really nice to collect those premiums. It would be great if those premiums were still in place for next week, with only the production numbers being planned to be released next week. And that's on the Friday. There's probably not going to be much activity on the Tesla stock unless there's some other news that occurs. This is a listing of the planned trades for next week. That's all. All right, thank you.